For the big players, the likes of JP Morgan and Bank of America, we're trying to understand the future and the future of loan growth. This is what the CFO, Paul Donofrio, had to say. This is the killer quote this morning. Revolving balances have been relatively flat, whereas spending trends have been up. That'll probably change over time as the consumer starts to relever. The second quarter was a turning point, and we can expect loan growth to improve. Bloomberg's Sonali Basak back with us for more. Sonali, that quote's important.
Yeah, absolutely. Another thing Paul Donofrio had told journalists this morning is that we are not a hedge fund. We are deploying our excess liquidity prudently. So this is about growth, but it's also about not having growth that is at the expense of taking on too much risk. Remember, these banks have de-risked a lot, John. The other interesting dynamic we're seeing is that growth in wealthier consumer loans versus the rest of the economy. As we know, we have some big headwinds still ahead in the economy. Those student loan repayments, mortgage forbearance is rolling off. So again, these bankers are now, Bank of America and Citigroup, pointing to upticks, but that doesn't erase what we're seeing now, for example, in home loans that are seeing a little bit of weakness. Interestingly, too, we're seeing cost control at a lot of these banks, but at Bank of America and Wells Fargo, part of that means in lower headcount, right? So what are they going to do in terms of jobs through the end of the year as some of these items are under pressure? We are seeing them invest in certain businesses, and right now we know, I mean, the clear winner in this earnings season are the investment bankers. The fact that Citigroup just posted a 37% jump in equities trading, they and Bank of America growing in equities and prime brokerage, while we know some of the Europeans are stepping back, is an area for more potential investment.
Just saw that banner there, Sonali, RTO. Is that return to office? Is that what we're using now? RTO, return to office, September. What have we learned about that from these banks in the past 24 hours?
Yeah, they are trying to get people back as much as possible. Another thing Mark Mason, the CFO of Citigroup, had told journalists this morning, just half an hour ago, was that this is dependent on data and it's dependent on region. But with that said, the bankers, as we know, anecdotally are telling us they want to be back. They want to win clients. I'm running into people on the street again every single day. So there is this rush for business at a market that has seen pressure on so many banking businesses, but a bright spot in mergers, acquisitions, and equity underwriting.
Good to see people getting back. Just final words, Sonali, Morgan Stanley, tomorrow, what are you looking for?
Equities, equities, and more equities. Can they keep that share? They are the #1 spot. And as we know, Ted Pick, who oversees that business more broadly at the Institutional Clients Group, is in such a prime spot when it comes to succession. So we're going to want to see gains rather than a diminished market share in that business.
Sonali, thank you.